America.
Good afternoon, everybody. This is Lil Roberts, CEO and founder of Xendoo, online bookkeeping and accounting, and so glad that you tuned in today. We have about a 15-minute chat on Got Profits Power of Three. And Power of Three is a concept of if you can reduce 3% in one area and increase 3% in another, that it is exponential to your bottom line on your income statement. So let's get started. Let's talk about, how do you do that as a business owner? And then we'll have time for a few questions at the end before we say goodbye. But of course, you can always reach out to chat with us at xendoo.com, xendoo.com. So Got Profits Power 3. What that concept is that depending on the type of business you are, right? And we're going to talk through both types of businesses. So traditionally, businesses sell one of two things. They either sell time or they sell a product. Now, of course, there's some, interesting technology businesses that are in the middle there that maybe are a marketplace or a SaaS model. And we can talk about that separately. But let's, for today, focus on professional services, which are people that sell time, and then people who sell products. So an example of professional services, marketing agencies, insurance, wealth advisors. So what you can do, if you're one of those, we're going to talk through on the examples. And then on the other side, if you're a retail business, you're selling products like a hat or, a bottle of water. It could be anything. So first, let's take a look at the difference between profits and cash flow. So 93% of small businesses, and when we talk about small businesses, we're talking about businesses that are less than 20 employees and that are in the United States, although you could be outside the US and operating a business in the US. So 93% of small business owners, less than 20 employees, they run their business from their bank account, and that's according to US Bank. And of those businesses, approximately 90% of them that close are profitable, but they don't know their cash. They don't know their cash flow. So it's not that they necessarily mismanage the cash flow. It's just that they didn't have the financial visibility. Either they're not working with a accounting company that gets them their financials on time, or maybe they're not doing financials at all. And you should look at your financials monthly. 46% of that group of businesses that fail, they fail because their prices are too low. Their customers didn't pay them. The record keeping excess expenses happened. And so those are things that you can affect as a business owner to help increase your profitability. So when we think about profits versus cash flow, profit is not cash flow. It will be one day, but think about that profit is what is left in the bucket after you have, had your business running and then a period of time ends. And what's left in that bucket is your profit, okay? Know your profits to understand your cash. So we've seen time and time again in businesses where people may think, well, if I do more volume, then I'll be able to overcome and have better profits. That's not always the case. If your pricing for your product or service is not enough to have a profitable margin, meaning that after your overhead and your expenses and your insurance and all the things that you don't physically see, a lot of people just think, well, I have to cover the cost of my product and I have to cover payroll, but they don't think about, well, once a year you may pay for your insurance. You need to factor that over 12 months. That's part of your overhead. So when you look at all of that, you need to be profitable on the unit pricing that you're selling. And so very, very important to have that. Know your industry metrics, right? So if you're a restaurant, typically what we see with restaurants is that restaurants have a lower cost of wages and a higher cost of product, right? Whereas other businesses may be flipped. They may have, like manufacturing typically may have a 33, 35% cost of wages and then have a 20 to 23% cost of goods. So know what the industry metrics are for your industry. And you can Google that. I mean, that information is readily available out there. And then that gives you a North Star to say, hey, I want to at least make sure I'm in the average, right? And then I want to see, how do I get to that top quartile, right? Profit and loss statements, they help predict your profit and cash flow months in advance, because you're going to see cyclically over time, most businesses are cyclical. And so you'll see that maybe you have a season, maybe you don't, but times of the year, you may have more business come in the door. Some times of the year, holidays affect. It can affect it as a positive or a negative in your sales of your business. And so when you have profit and loss monthly and not wait till the end of the year to just do one profit and loss, you're going to have better insight into the cycle of your business. And then make your business easy. Pick 3 KPIs to focus on. So say, okay, I need, in order for me to be profitable, say you want a 20% bottom line, meaning 20% profit. Know what you need to hit target-wise in sales, and know what you need to hit as your expenses, right? If you take your cost of goods and then your regular GA expenses, your general and administrative expenses, what do you need to hit in those areas? And just focus on those 3 KPIs, and you'd be amazed at how your business changes. All right. So let's dive into the power of 3. So the power of 3 is not something that's widely out there on the web, but it's something that large corporations take advantage of. And if large corporations are taking advantage of it, why can't small business take advantage of it, right? So what do I mean by that? So, GM, they'll say, okay, how do we, reduce our cost of goods by 3% and at the same time increase our price by 3%? Because they know that the correlation is exponential. And I'm going to walk you through that. So let's take a few examples here. So say you are a product business, and say you're selling you're selling shirts, right? And a shirt is $30. And if you increase it by 3%, that means the shirt's going to be $31. It's really going to be $30.90, but you might as well round it up. So $31. Do you think somebody's going to walk out of your store over $1? They're not. And that's a $30 product. What if it's a $5 product? You're only increasing it 15 cents. You can make it 25 cents. If somebody is there, they're going to buy it. So increase your price by 3%. Now, you have to do the other side of the equation, and that is that you have to decrease the cost of your price, the cost of your product by 3%. So how can you decrease the cost of a product by 3%? So if you're buying a shirt, right, can you buy a higher quantity to get a lower price? Can you order ahead enough to where you don't pay as much in shipping? So instead of, say, 2-day shipping or 3-day shipping, you can get ground shipping, right? So how do you make those types of things happen to get a 3%? Can you pay the product faster? So lots of times manufacturers, where you're buying your product, will give you a 2% net 10. So think about it. You're already collecting 2% by having better cash flow. You can collect 2% of that 3% right there. And now you're going to see how that affects on a product business exponentially. So other ways to do it, say you're manufacturing, or say you're time, right? So let's say that you are a marketing agency. So a marketing agency could increase production by 3%. How do you increase production by 3% if you are selling time? So look at what your team is utilizing for their equipment. Are they on a fast computer? Are they using 3 monitors? 3 monitors increase efficiency by 30%. So are they on 3 monitors? Just by adding a $150 monitor to put them on 3 instead of 2 will increase efficiencies, and they'll work faster. So that's one way to increase your efficiencies there. Tech stack also. If you take a look at your tech stack that your team is working on, is there some ways to automate things that will make them more efficient? And of course, you have to weigh out those subscription type items against what you're doing, right? To make sure that you're going to get enough efficiency and not increase your overhead. And then you can take a look at the hours work. So that's really how much time does it take for them to do what they're doing? So can you increase the production of them? Can you also increase the price to your customer by that 3%? So if you're selling a marketing agency and 3% of $1,000, right, would be $1,000 and $1,030, you could certainly make it $1,050, and they're not going to notice it. And that's going to give you that 3% bump. And then increase your efficiencies on the other side. All right. So 2 examples, time and product. So now let's walk through an example, right? So if you walk through an example, product retail. So if you are selling a product retail and say your revenue was 1.2 million in revenue, by increasing your sales price by simply negligible, right? 3%, you're now going to have a total sales price of a gross revenue of 1,290,000. So right there, you picked up an extra $37,000. But now let's see what happens. So there's 37,000. Now we take our cost of goods sold, and either you're paying for it in net 10 days, so you're collecting 2% there, and now you're rerouting how you're buying your shipping, or you're increasing quantity. So you've achieved the 3% lower price. For the increased product by 3% lower, you actually are now at a cost of goods sold of 794,000. So now if you look at that 818 number with the lower sales, we picked up what? Another 22. So 37 and 22, we picked up $57,000. That the rest didn't change. So below the line, right, you've increased your gross profit, your salaries and wages stayed the same, your G&A expenses stayed the same, your rent stayed the same, but you picked up, 35% more profit just by doing those 2 things. Increasing your sales price by 3%, decreasing your cost. Now that's if you're selling a product. Let's look at the sales time. So sales time does not have as much of an exponential bump, but it's still a bump. So same thing, your marketing agency, you're charging $1,400, $1,500 a month. You increased it 3%, maybe a little bit more just to round it up. And now you went from 675,000 revenue to 696, right? Just by that one little item, one little tweak to your business. And then you put some efficiencies in on your business, and you were able to get more time from your team. And you went from 280,000 in wages to 268. So you picked up 12,000 there, along with another 21,000 on the other side. So everything else stays the same. Your G&A, your rent, all that stays the same. So now you just went profitability wise, you just went from 252,000 to 285,000, an 18% increase in your profit, just by 2 small tweaks on the time side. So last piece of this is, let's talk about some tax savings, right? So if you're a business owner and you're say an LLC, and you may be filing as a multi-member LLC, a 1065 tax return, or you may be filing as a sole proprietor or a Schedule C, a single member LLC would be a Schedule C on your 1040. If you have more than $30,000, $40,000 that you're paying yourself, right? Because whatever you pay yourself is also considered profit in your business. It may be worth your while to file what's called an S Corp election, which is a Form 2553. So that's something that you want to talk to your accounting professional. If you don't have an accounting professional, we'd love to take care of you. So please reach out to us. We'd be happy to take care of you. And you want to file that because that's going to save you a bunch of money at the end of the year. There's industry specific tax savings for your industry. You'd need to talk to somebody on our team for that. And then of course, tax planning is always something that you want to do throughout the year. Most small business owners, they wait until March of the next year before they go to take advantage of tax savings. And you can't take advantage of tax savings in March next year. The time to take advantage of your tax savings is throughout the year. And that's why you need monthly P&Ls for that, okay? And then of course, there's credits and deductions that you can do. So it's been a pleasure to spend these few minutes. I do see that there's a couple of questions in the chat box here. So I'm going to go ahead and answer those before we wrap up. And so let me take a look here. Oh, I see that we have Aaron from Utah. And Aaron's question is around the S Corp election. How much in savings do you get there? Great question, Aaron. So what happens on the S Corp election is that, say your business has $100,000 in profit. And if you're a single member LLC, you're going to get charged Social Security tax as well as income tax on that. And so that means as self-employed, you're going to pay 15.3% Social Security. You're going to match the employee and the employer. And so what happens there is if you were paying yourself a reasonable salary, $40,000, $45,000, the other $55,000, instead of paying the 15%, let's just call it 50,000, instead of paying that 15% extra, 15.3, which would be another, call it $8,000 that you would be paying in tax, you wouldn't be paying it. You would take it as a distribution at the end of the year and only pay income tax on it instead of income tax and Social Security. So that's the reason to have the S election on that. And I see another question here, and we're right around the 15-minute mark. So I'll take one or two more questions, and then please, for the rest of you, feel free to give us a call, schedule a call, or contact us at sales@Xendoo, Xendoo.com. And so here is Barb from Atlanta. Hi, Barb. And Barb's question's around if you're a logistics company, how does this apply to a logistics company? Great question. Okay, so logistics company, you're still really, you're selling time, you're selling travel, right? Time and travel. So if I were in your shoes as a logistics company, if you're like a last mile company, then I'm going to be thinking about, can I go to my local gas station and can I get a corporate account? And can I potentially save 3% on the cost of the gas for your fleet, right? Second thing that I'm going to think about is, are we using the most efficient type vehicles that the team is using both in gas and in maintenance? So when vehicles reach a certain age, you're really actually better off to just go lease new ones instead of consistently paying for repairs across that way. The other piece that I'm going to look at is that, are we having our drivers stop and gas up? Are we having our team that may be at a different rate of pay out doing things that a different team at a different rate of pay could be? Because you got to figure out how to lower the other side of the 3%, right? And then lastly, can you increase your pricing slightly, just slightly in the delivery? And so with that, you're going to be able to still hit that. That's a great question on the logistics company because you sell both, right? You're selling time and you also have product costs as upkeep to do the service that you're doing. So again, everybody, it's been an absolute pleasure to spend these 15, 16 minutes with you. Please reach out to us. We love small business owners. We believe in the power of small business. Largest employer in the United States, right, are all of us small businesses. And at the end of the day, Xendoo, Xendoo, is also a small business because we're not 500 or more employees, right? So have an awesome day. Please share this with your fellow business owners and reach out and give us a call. We'd love to talk to you. All right. Talk soon. Bye-bye.